Good morning, good morning, good morning. It is time for the big payback. How's everybody doing this morning? It feels fantastic to be live again. I know that you've seen a couple of shows, some repeaters, but I'm going to tell you something. Those repeaters were important because what we want to do is move ourselves to take action. So today it's about taking back your power. You know, Bernard Kamoroff, by the way, just so that we're clear, this is where what we're going to be talking about today. In fact, actually, when I originally got Bernard Kamoroff's books, that was there were 400 deductions. Now it's up to 475 deductions. He is in the 10th edition, which, as he points out, is thoroughly updated. So we're going to be doing a lot of talking about his book. But here's the deal. You, me, we are all obligated, not just our right, we are obligated to get our money back. The system, if you will, the IRS, can really be our friend if we allow it to be. I know that that's probably the shocker of shockers. Be like, what? Are you kidding me, Brent? What's wrong with you? It can be if we utilize it, but we've got to exercise our authority, exercise our power, exercise our rights. That's right. It is about figuring out, take advantage of what's on the table. You have heard me short of preach about the fact that we need to open up our own businesses. You heard me share with you that I met a gentleman in the bank. He knows who he is, so I'm not going to say his name on air. But we started talking about his check and how much was being deducted from his check. So my first question was, do you own your own business? He said no. He owns his own house. That's a Schedule E. But do you own your own business? He said, no, I don't. I said, we need to sit down and talk. You need to have another way of pulling that money back. I asked you, how'd you feel about an extra $15,000 coming back to you? Because I had that experience, not once, not twice, not 3 times. And guess what? That was on an amended tax return. That's right, an amended. Now, granted, I owned a business. Yes, that is true. So I'm not going to say that that wasn't the case. However, here's the point. I got it back. Can you imagine 3 amendments, 3 tax returns, double digits? Yay! That's what I am talking about. You hear me preaching. You hear me short of begging. Come on, folks. Let's make it happen. Instead of complaining or saying, well, this person got this, or the wealthy person got this, we can be wealthy in our own right by exercising and mirroring what they do. I remember my grandmother used to work in the trust department, and she would say, when they bought, she bought. When they sold, she sold. 22 years later, long after my grandmother has passed, my mother is able to take advantage of what my grandmother put in place. And guess what? That's going to get passed on to my nephews. They are going to have a better lifestyle. Here's the deal, though. And like I've told them, do not think I am just handing over the keys to the kingdom. No, we are putting in place stop gaps so that when you're 21, when you're 25, and when you're 30, because by the time you're 30, you ought to have some brain power. And you've got to put those, we have to put those things in place so that we create the power that we have worked for and want to pass on to the next generation. Because we've got 2 obligations. First and foremost, we have an obligation to ourselves. Pay yourself. What do we read all the time? You take 10% out for you because you do not want to sit there and live a meager lifestyle trying to for the next generation. It is not about that. What you want to do, or what we want to do, is we want to create a lifestyle that makes us happy. And then we want to leave a legacy. So we are creating a lifestyle for us, leaving a legacy to follow. We've got to make sure, though, that we've given instruction on that. So we have our children, we have our grandchildren, we have our nieces, we have our nephews. There's an obligation to teach them, because, this is the kind of stuff that's, for the most part, really isn't taught in school. It's a part of living, and it's not necessarily taught in school. So here we go. The big payback. The big payback is you being able to master the, I want to call it an art, because you can get it to an art form where you are mastering your taxes. You have the power to make that happen. How do we do that? One, we do that through home ownership, because we get that interest deduction. And if we are incredibly smart, we have multi-unit properties. I was listening to Jim Rohn, and he talked about a time when how he became wealthy, and he was wealthy by the time he was 30. He said he was rich when he was 25, wealthy when he's 30. And he says, when I teach kids about wealth, he says, you know what I tell them to do? Go buy 2 bikes, one for you and one to rent. That's what we're talking about. Now that creates the power. Yes, that creates the power, because it's your right and it is your obligation. Our rights, our obligation. This country was founded on freedom. This country was founded on apple pie and home ownership. That's why in the 1930s, you had Freddie Mac and Fannie Mae, which is the acronyms for the federal loan programs, because home ownership was so critical. It was such a part of the American fabric. That's what they fought for. So now it's our time to take advantage of that. And the deduction that you get on your taxes is part of that advantage. Now, I gotta ask you something. Did you hear a nugget already this morning? Because I hope you did. I would like to see us taking our fingers to the keyboards, and let's put some nuggets up there. One of your nuggets is you have the power. Or you should say, I have the power. Hashtag, I have the power. Hashtag, I am the possibility. Because right now, that's my hashtag. I am the possibility. And I appreciate Giselle for making that a part of my lifestyle, because I have adopted that. What are you adopting? Do you believe that you have the power? Because today, about the big payback is about you grabbing your power. We have 2 more weeks before the end of this year for you to grab your power. And grabbing your power means structuring your taxes so that you get back as much as you are able to. And then we start investing it going into the new year, because it's about our goals and it's about the results. I got to give a shout out to a very dear friend, Ms. Kaufman. She knows who she is, because I appreciate that she gave me a piece of my power back so that 2016 is going to be extraordinary. Will it be extraordinary for you? It will be if we start digging in. So we're going to dig into some of this book today. But before we get started, we've got a number of new people that have come into the Wealth Warrior family. And so I want to invite them in and say thank you and welcome aboard. Also, we're going to have some announcements today. We are having a year-end party in Boston this upcoming Tuesday. So that's going to be nice and wild. But first, we're going to start by, folks, start letting us know who you are and where you're hailing from. Want to give a shout out. The first person that checked in this morning was State Representative Gloria Fox. So I want to say welcome, Ms. Fox. Also want to give a shout out to Carol Parker. And I hope that I said this correctly, Carol Parker, because she was the second person to hail in. Want to give a hail and a shout out to Nicole Dublin. I saw her up there too. And of course, we got hummingbird flies. That's Alina Lopez Thomas. So I'm giving my shout outs this morning because I really appreciate the fact that you're here. I really appreciate the fact that you're listening. Now, we've been listening since April. Are we taking action so that it delivers results? And that was something I got from my conversation with Ms. Kaufman the end of last month. We've got activity, we've got action, and we've got results. Activity, action, results. Where are you at in that scheme of things? Because if we're still playing in activities, we're in the sandbox. Time to get out of the sandbox. It is absolutely time to get into a place called action. Action, action, action. Now, action that delivers results. That's what I'm talking about. So let's dig in. First and foremost, as we dig in, we've got to let everybody know who we are and where we're at, because we want to invite other people into the party. So I'd like for you to start right now, and we're going to do a shout out. We're going to do a flash mob on Twitter. Open up your Twitter accounts, and we're going to say who we are and what we're listening to. We're going to invite people to the Wealth Warrior broadcast. So that's all we want to do. We want to say, join us on the Wealth Warrior broadcast this morning, because it's open to the public. We are a closed group, but we're opening it up to the public today. So everybody, go to your Twitter account, and we're going to do a flash mob. And all the flash mob needs to say is, join us on the Wealth Warrior broadcast now. Already, that should be. On your mark, on the count of 3, we're going to hit it. You ready? 1, 2, 3, flash mob! That's right. Invite folks to this broadcast. Invite your friends to the broadcast, because we are about to lay some nuggets on each other. That's right, about to lay some nuggets on each other. And while you are flash mobbing and inviting, want to give a shout out to Kelly McGovern. Hey there, Kelly, how you doing today? Want to, of course, give a shout out to the October man, Mr. Robert Randolph. Hey, Rob, how you doing this morning? So I want to shout out to folks. While you are taking care of that, let me make some announcements. We're going to have some monumental adjustments to the broadcast come January. We have a coordinator for our broadcast, somebody that is dear to my heart, and that is Ms. Traverse. She's going to be working with me behind the scenes so that the broadcast really starts to light up. Also, I have the opportunity, the privilege of working with Mr. George Watson, who is going to add to this broadcast. He doesn't know it yet, but he is very definitely going to add to the broadcast. We're going to bring back some of our faculty, and I want to let you know that I recently signed a joint venture agreement to bring real estate to the table. So for those of you that want to be investors, whether you're first time, you do not even own a piece of property, so you're a first time investor. Notice I didn't say first time home buyer, I said first time investor, because we want to leverage the property that we have. We want to leverage that. So first quarter, because remember this, April will be upon us very shortly. And we're going to have a report card in April that says, what did we do? How did we accomplish our mission? Did we reach it? So we're going to have that. And I want to share with you, should be the first quarter of the upcoming new year 2016, I will have a book out. I'm not going to share the title or any of the details yet, but do know that I will have a book out within the first quarter of 2016. Yeah, that's right. Author. For real. In fact, my mission is to do 2 books, one at the beginning of the year and one towards the third quarter of the year. Okay, I've talked long enough. How about this? I want to open up the book again. I want to show it one more time. Okay, this is 475 tax deductions for businesses and self-employed. Because I know that if you've been watching the news here lately, and you've been watching the political scene, the world scene, one of the things that we do know is we have a businessman that wants to lay claim to being the CEO of the country. What did he say? He said, we must own our own, because that's where the power is. That's where the leverage is. So we're going to leverage ourselves by saying before this year closes, you need to own a business. We know the easiest, quickest business, the fastest turnkey operation, of course, is going to be a network marketing business. And more often than not, you're going to want one that doesn't require you to have a lot of inventory. In fact, personally, I wouldn't have any inventory. I'm looking for something that is on the internet and has no inventory. But that's a story for another time. So let's talk about this book. Now, he talks about who this book is really good for. And it's good for somebody that's working for him or herself. Now, I remember I'm into Jim Rohn right now. And one of the things he said, I work my part-time, no, rephrase that. I'm working on this. He says he works a full-time job, but he's working also he works part-time on his fortune. So he works a full-time job and he works part-time on his fortune. And because he worked part-time on his fortune, it qualified him to consider himself self-employed. It says the book includes information for sole proprietors, which you can, in fact, own a network marketing business and be a sole proprietor. This book is great for partners in partnerships, members of limited liability corporations, and people who own their own corporations. Now notice this, you can be a solopreneur, a sole proprietor. They are pretty much one and the same. An entrepreneur is where we're driving this conversation. And when you own multiple, then you become a serial entrepreneur. I consider myself a serial entrepreneur. Now, along with that, serial entrepreneurship or entrepreneurship come other rights, but what you're doing is you're creating profit centers. So you can be a solo entrepreneur, you've got one profit center, or you can have multiple profit centers. I would say this to you, when you get past the third one, you need the help. You're probably stretching yourself more than you would like. So I would encourage you to give more than the usual consideration to how many actions you have going on. But at a minimum, you need to be a solo entrepreneur. It says this book is for, and let me just run down the list, for repair people, shopkeepers, manufacturers, tradespeople, freelancers, professionals, independent contractors, outside contractors, subcontractors, general contractors, contract laborers. Notice, again, all the facets of ownership that you can participate in if you are a consultant. Now, okay, so some of you are going to say, well, Brent, you know what? A consultant is probably the best. Well, I'll say this to you. What are you going to consult on? And how quickly can you get a contract that qualifies you as a consultant so that you can make those deductions? Okay, so don't think that I'm not looking at this. Entrepreneurs, consultants, mail order business, internet business, artists, craftsmen, direct marketers, network marketers, multi-level marketers, free agents, virtual agents, sales reps, inventors, employers, moonlighters, home businesses, full-time, part-time, sideline, you name it. Unless you are on someone else's payroll as an employee, you are in business for yourself. You are entitled to all the business deductions in this book. Okay, so you're working full-time. However, your fortune is what you're doing part-time. That's according to Jim Rohn. Let me move along. I wanted to move to something that people oftentimes get concerned about, and that is, will your deduction trigger an audit. And I want to share with you what he has to say. First of all, he says, welcome to the club. There are thousands of small business people paying millions of dollars in taxes. They don't owe. Don't owe. Year after year, simply why? Out of fear that they will be audited. Now that's a crying shame, paying thousands. In fact, no, what did they say? Millions of dollars that they actually don't owe. He says here they don't take office deductions because it'll guarantee an audit. What home base owner hasn't heard of that comment before? And the reality is, it is a myth. Guess what? You got to buy the book to get the rest of the story, because I just want to give you some touches. Now, I like something that he says here. He says, when in doubt, deduct. Because that's my attitude. When in doubt, deduct. And let me share with you what he does say. He says, even after all the study, talking to experts, and getting deep into the Internal Revenue Code, IRS, sometimes you still cannot be positive that a certain deduction is or isn't legitimate. And the IRS says one thing, the tax court says another, the exact opposite, and your congressman who dreamed up the law, I love this part, is still on vacation. What do? He says here that the answer depends on your own personality. How courageous are you? How adventurous are you? He says how comfortable or uncomfortable you are if you have to face an audit. Some people, it draws terror. People have literally wet their pants at the thought of an audit. And as a result of that, they are willing to pay rather than take the option that's available to them. So let me share a little bit more. It says, however comfortable you are and how much is at stake. If you're only going to save a few bucks, but you might get, if you're going to save a few bucks, but might get a dear taxpayer letter from the IRS, and you may open up Pandora's box, then you probably want to leave it closed if it's just a few bucks. But if we're talking about some serious money, then, and it says here, but if you have nothing to hide and lots to save, I personally will go for it. Your chance of being audited, no matter what you deduct, is less than 2%. So I hope that that gives you some sense of comfort. Now he says here, I want to make one thing clear throughout this book. If any deduction is questionable, if there is any doubt, any disagreement, any IRS opposition, I spell out in the description of the deduction. You will not be caught by surprise. So you're going to know in here, he tells you what the deduction is, and then he gives you some detail so that you can make an informed decision. So again, your personality, your willingness to be adventurous is what makes the difference. And I thought that was interesting. Your personality is what is a driver. Now, tax loopholes and tax secrets. He says tax laws are often carelessly written, which is how tax loopholes come to fruition. Every time a new law comes out, clever accountants and eagle-eyed lawyers find holes in the law. In fact, they consider that to be their job, to find the hole to slide you through. And so what's interesting is it goes on to say, find unintended deductions, find ways around the laws neither Congress nor the IRS intended. And those are called tax loopholes. Some of the tax loopholes are actually, they really are legitimate deductions, but some of them are questionable or gray. You know, when we were children, it was either black or white. And the older we've gotten, the more it becomes gray. the more the color becomes gray. And so I love the fact that he put that in there. He said that what he is doing in this book, every tax loophole that applies to businesses is listed and explained, which I've already shared. So you will know which ones are legitimate tax deductions versus which ones are stretching the envelope to the point where in some instances you've actually just climbed out of the sandbox on that one. But you do know. Now, it says here, do you want to know about tax secrets? There aren't any. There are no tax secrets. He goes on to say, there are no secrets in tax law. There are, however, legitimate tax deductions that few people know about. Sort of, now, from that perspective, they can be viewed as sort of secrets, but every secret deduction that applies to business is right here in the book. So the reality is there isn't anything. Now, I want to read this verbatim. He says, what isn't in this book are tax avoidance schemes, abusive tax shelters, tax scams, or dubious deductions that will get you audited for sure. So that's important for you to know, that we're not giving you anything that is going to cause you harm and affect you or the generations behind you. Now, most people will say, oh man, I wish I knew that last year for last year's taxes or the year before. That's why they have something called amending your tax return. Did you legitimately miss a tax deduction? Did you forget about something? For example, you own real estate. You are so embroiled in the real estate. Did you remember that you put the real estate in a trust? Did you realize the trust needs to file a separate tax return? That's right. It needs to file a separate tax return. Did you remember to tell your tax preparer about that? Yikes! How do I know this? Because it happened to somebody recently. Okay, so here's the deal. You missed one for that year. Well, there are some people, in fact, he goes on to talk about a woman that was from Virginia that thought that suddenly Santa Claus had come to her house. It says, you can go back and amend prior tax returns and claim a refund of prior year's taxes. Amended tax returns must be filed, however, within 3 years from the date you filed the original return, or within 2 years from the time you paid your tax, whichever is later. So that's something that is important. So he's going to give us an example. So let me read that to you. It says, a return filed early is considered filed on the due date. So for, let's say, 2011 returns, you filed and paid on time, April 15th, 2012, or ahead of time, you have until April 15th of 2015 to amend the return. Tax returns are amended, and he goes on to give you the details about that. And of course, your tax preparer is going to know what you need to do. But it is important for you to understand that you have the right to amend those tax returns. Now, you want to make sure it's worth it. You know, if you've had a deduction that's $100, it probably isn't worth it. However, if you have deductions of $1,000, you might want to give the usual. What's the cost to amend? Cost to amend is, let's say it's a couple $100 by your tax preparer. You're still going to be $800 to the positive. I don't know about you, but I'm not leaving it on the table. That's the money I could be putting into stock or getting or something that's interest bearing. I'm just saying. Probably one of the most challenging aspects of any element of what I'm talking about, whether we're talking about taxes, because we've talked about that this year, whether we're talking about credit, we've again talked about that this year, real estate in terms of when you have tenants, critical, and this is where people lose out, is because of poor record keeping. Let me share with you. It says many legitimate tax deductions are lost because people don't know about them. That's the reason for this book. Of course, we know that. However, he goes on to talk about the fact that what is record keeping is, in fact, the very heart of taking advantage of tax deductions. Record keeping. If you don't have a good a set of business ledgers, I want you to stop right here, and I want you to implement it now. That means for the next 2 weeks, you are doing catch up from what occurred at the beginning of the year till now. Will it be worth it? You bet it is. What's an extra 10 grand going to do for you? It's going to start the new year off very nicely. Position you likely to have another business. You might want to purchase some stock. Because I'm going to tell you something. If I'm eating at that location, guess what? I got stock in that company. If it is a publicly traded company, I got stock there because I want to get some payback. Because I'm going to tell you, 2016, the whole year is going to be about the big payback. That's right, the big payback. Now, here's my question for you. Did you get some nuggets out of what we just discussed? Because I'm going to tell you, if you didn't get any nuggets, you must have been sleeping under a rock, because there are nuggets on the table. So I want everybody, let's do something. I need you to go back and do some hashtagging this morning. How about hashtag I am self-employed? How about hashtag I am an entrepreneur? Claim it. And I'll tell you what, if you are starting your business today, as soon as the broadcast is over, I want you to go ahead and claim, I am an entrepreneur. I am self-employed. No, we won't do that part. I was going to say it's not right, but let's stick with those ones, all righty? So what we're saying is claim it, hashtag it, because it is a serious nugget. The wealthy get wealthy and stay wealthy. Why? Because they leverage. Hashtag leverage. They leverage the time and talents of other people. They leverage the material items that they have. They leverage their real estate. People leverage jewelry. So leveraging is a 2016 phenomenon. What can you leverage? What can we leverage? Well, I'll tell you, leverage starts by owning. It really does. It starts by owning. It puts you higher up on the food chain. Okay, let's hit another hashtag. As you can see, I got my tabs in there. Absolutely, absolutely, because I wanted to make sure I brought you everything that is the best that I could bring you. And I want somebody to go ahead and write that. Audits are not the end. Audits are not the end. What does that mean? That means that somewhere in your business life, you may very well have an audit. Here's the deal. Are you surrounded by a team, somebody that can handle that audit for you? Now, know this. Should that occur, should you have an audit, you do not just send the tax accountant down. You attend with the tax accountant so that you can hear what's being said. That makes you stronger. It makes you better. What do we say? Iron sharpens iron. It makes you informed. We have got to be participants in our own life, not just arrive when all the work is done. We got to be a part of the process. Now, here's the deal. We've got to decide who's going to do what, but we've got to be cognizant of it. Because you know what? At the end of the day, who's going to end up with them silver bracelets if something goes wrong? So we've got to be participants in our life. So hashtag when in doubt, deduct. Hashtag when in doubt, deduct. These are powerful hashtags for today. Now, I appreciate the fact that many of you are listening into the broadcast, and I see very few actually. I go up on the broadcast and I said, put a hashtag in there. And I'm like, no hashtags. I'm the one putting in the hashtag. Help me out. Put some hashtags in here. You know, I remember when I was on radio and what was said to me, I used to say, call in, call in, call in. And I'd be wondering why people don't call in. And I remember the station manager saying, because they're listening, Brent. So, but I got to share this one with you. This is an interactive conversation. interactive. And how is it interactive? Because you get on the keyboards. That's how it's interactive. Very fine. So I hope you invited folks on to the broadcast today, and we're getting some nuggets here. Now, here's my question for you. Yes or no? Is there any such thing as tax secrets? Yes or no? Is there any such thing as tax secrets? I hope your answer was a two-letter word, no. There are, however, tax loopholes. Now, did Congress anticipate this? No. Who figured this out? Your CPA and tax attorneys. They saw the law and they went, something we can do. That's their job. And hopefully they're doing it well on your behalf. Record keeping, we talked about that. Record keeping is the lifeblood. Do you know, even today, a handwritten journal is still admissible in a court of law? A handwritten journal, which means I got to give a shout out to Miss Stephanie White. Stephanie White hails out of New York. She is a business associate of mine, and she says, Brent, I keep records. I keep a journal. I've got a journal for this. I've got a journal for that, because I can flip back to the journal. In some instances, I can flip back to the journal faster than I can boot up on my computer. And we all know that a written journal is very definitely still permissible in a court of law. Amazing, wouldn't you say? So with that being said, we want to keep records. Keep the records. That piece of paper can save your financial life. Now, here's some interesting information for you. A couple of things. First of all, when can you take a tax deduction? Year-end payments, and then structuring transactions to your best tax advantage. That's what I want to go over for a few minutes here. It says, when can you take a tax deduction? Excuse me there. It says most tax deductions are taken the year that you incur the expense. But there are many exceptions to this rule. Some prepaid expenses are deducted the year they apply, regardless of when you paid for them. So that means if you did some prepaids in 2015, but you are not going to do them until 2017, as it says, some prepaid expenses are deductible the year they apply. So 2017 is when you would, in fact, pay that. You know, that's a part of that gets into structuring your transactions for your best tax advantage. If your projections are saying that in 2017 you are going to have such an awesome, fantastic year based on your projections, then guess what? You may want to prepay, because you will be able to offset it 2-3 years from now. It goes on to say that some expenses must be depreciated. That's a requirement, which means they're written off over several years, inventory, things of that nature. In particular, it says inventory, which goods for sale, cannot be written off until the inventory is actually sold. In the list of 475 deductions, any expense that cannot be deducted currently is explained. And again, we say the statement, you will not have to guess if the expense is currently deductible, because he's going to share that with you. Now, is he the complete and utter authority? The answer is no. However, here's the point. He is a good foundation for you to build upon. It is one of those that you can go and take a quick and easy. For example, I'm just looking right now. Let me go and see if I can't find something. Okay, here's something, a logo. It says here, the cost of creating a company or product logo is deductible. If the cost is substantial, it may have to be amortized, depreciated over several years. You should ask your accountant about this. He goes on to share expense category, so you know what category this could be in. It could be in other expenses, or it could be in a depreciation. It goes on. Here's another one. long-term car or long-term care insurance because it's going to happen to us at some point in time. And it says long-term care insurance comes under the same eligibility rules as health insurance. So then we flip back to see what that is. But it goes on to say that long-term care insurance is subject to a dollar limitation, which the IRS changes from year to year and which varies depending on your age. So again, you've got information here, not just, oh, this is the deduction, but you've got an explanation. Why? Because your personality is involved. So with that being said, let me flip back and discuss year-end payments. Checks written and mailed or delivered by the 31st can be deducted the year written, even if cashed in the new year. You want to know the busiest time that the post office has? You want to know the busiest day? Most people think that it's April 15th. It's December 31st, because I'm going to tell you something. I've been in the post office December 31st at 11:30, and there is a line that's out the door, and I'm begging, come on, people, come on. For those of you in Massachusetts, specifically in Boston, you're familiar with Fort Point Channel. And at one time, that post office was open 24 hours a day. 24 hours a day. And I will tell you, on December 31st, standing in line, and you're sitting there, come. And they would have literally at least four stations open and lines. And you'd be sitting there holding your breath. And there would be a person there that's now got to ask some questions. Well, what about this? And what about that? Well, can I do this? And you're sitting there going, lady, fella, if you don't get out of the way, this is not for you. The people that are there on December 31st are folks that need a stamp. They need that stamped by December 31st so they can count it in on their tax return. The busiest day for tax people, for entrepreneurs, self-employed, full-time, working on your part-time fortune, are people in the post office on December 31st. Now, again, what is it saying? It's saying that even if it's cashed in January, it still counts for your benefit in December. Bills paid electronically are deducted the year your account is debited. Notice that? The year. So if in fact you've done the transaction on December 31st, however, the vendor does not actually make the audit, and does not actually debit the account until January 3rd, you are SOL, sad and out of luck. So in many instances, people think or feel, oh, checks are out of old-fashioned, they're out of fashion. They are not. I remember one time asking an attorney about why she used a fax machine. And I was astonished at her answer. If you would like the answer to that question, then you're going to have to inbox me, because I'm not going to put that out right here. And guess what? You know why I want you to do that? Because that's called action. What's the difference between a lead and a prospect? A lead is a name. A prospect is somebody that's done something. They've taken an action, which then requires, or it allows for, a reaction. Smart, isn't it? Okay, so let's go on. If a bill is paid in December but not processed by your bank until January, the expense, excuse me, the expense cannot be deducted until the next year. Excuse me a moment. Now, you're saying, well, wait a second, Brent, I don't get that. What's the difference? You wrote a check, mailed, and it was delivered by the 31st, and it can be deducted the year written, even if it's cashed in the new year, versus if a bill is paid in December but not processed until January, the expense cannot be deducted. Well, until next year, so it would be 2016. And that's because the reality is there's no stamp. There's nothing that indicates that it was actually purchased or transacted or something of that nature. So it's a fine line, but that's where checks become your friend. Now, expenses charged on bank credit cards are deducted the year the expense is incurred. See, this language right here, this one single paragraph is worth getting the book. The one single paragraph speaks to what we call structuring the transaction for what? Your best tax advantage. We've talked about real estate, tax advantage. Your employment when you marry it with owning a business, tax advantage. Being an entrepreneur, tax advantage. The simplest, quickest ways to create entrepreneurship, to become a solopreneur, what are they? Become a consultant, get an agreement. Get something that says you are now engaged as a consultant, an independent contractor, or open up a network marketing business. Those are the most expedient. You can be up and running in minutes and hours, days. With that being said, let me touch upon a few things. One is structuring your best tax advantage. And it says here, you want to, obviously, you want to do your best to be sure every expense in your business becomes a tax deduction. Oh, Brent, is that legal? You want to do your best to be sure every expense becomes a tax deduction. How does that occur? Often simply the way you structure the deal or the way you word the contract or how you describe the expense can mean the difference between something that is deductible versus something that is not. However, he goes on to say, I try to warn us, about every different expenditure and how that is actually written, or how that is actually understood so that it is in fact legal. He says, though, throughout the book, what he's doing is helping you to figure out how to structure that tax deduction. When do you want to buy machinery if you are in a business in which you're using machinery? So that's going to be very, very important. It says large corporations hire $300 an hour tax attorneys to do nothing but find ways around the tax laws they don't want to pay. You get the benefit of that through this book. But don't be afraid to quiz your tax accountant about any expense that you may want to have reworked. Now, I remember when Bob was on, our October man, when Bob Randolph was on, and he had talked about the benefit, his experience with our IRS, because it is all of ours, and what he was able to do, the importance of having a tax accountant, tax preparer, tax expert. But here's the deal. You and I should, in fact, question, ask about the deductions, ask about their history, ask about what they've done. I will share with you that my mom had an experience that was absolutely extraordinary for her. And being a woman of age, I mean, some of our elders, you share with them that they've got an obligation, they've got a bill from the IRS, they open it up and it says they owe $18,000, that can trigger a heart attack. And it happened to her. So two things occurred. My question was, Mom, who did your taxes? Well, her tax preparer was out of town, and he was going to be out of town longer than, he was going to be out of town beyond a certain period of time. So he suggested that she get in contact with somebody that was in that company. It just so happens that the person that she in fact did get in contact with was not familiar with home-based businesses and didn't know the questions to ask. So when she goes in, she doesn't say to him, oh, by the way, I have this little home-based business over here, and I need you to file the schedule that's associated with that. And in fact, there were two schedules that were associated with that, and guess what? I got this little network marketing home-based business over here. I got this little thing over here. She didn't say anything. Guess what happened? When all was said and done, she got back $1,000. That went from an $18,000 obligation to $1,000 to the positive, to her profit center. That's what I'm talking about. But how does that occur? Because you've got the knowledge. So it is your obligation to ask the questions. It's your right to ask the questions. And quite frankly, I'd be moving on that very quickly because, come January 1st, most of our tax preparers are not necessarily willing to sit down and be quizzed. They're not willing to sit down and have a consultation with you, even if you gave them the money, because there's so many tax returns they have to prepare that your money, $300, $400, $500, is not going to be worth it in comparison to how many returns that they're going to be processing. So I've been begging, pleading since November. It's sudden death overtime. We're in the 2-minute warning. What are you going to do? It's on you. Go on. It talks about how many times have you heard about some business that is losing money or making a worthless purchase or spending frivolously, but hey, it's a tax write-off. I have heard that statement so many times. He says, after 20 years dealing with tax laws, I still don't find the logic of this strategy. I don't either, because I've heard people say, oh, it's a tax write-off. Well, first and foremost, you got to have it in order for you to pay for it, so it can be a tax write-off. What is a tax write-off? Is there a purpose to reason for this? Logic. He goes on to say that the concept of incurring an expense solely as a tax write-off is, when you get right down to it, ridiculous. The expense will always be greater than the tax write-off the expense brings. That must be obvious. A tax write-off and a tax deduction are the same thing. A tax write-off and a tax deduction are the same thing. But here, in fact, is the deal. Here, in fact, is the deal. Business transactions should not solely be tax motivated. I'm Studio 116. Yeah, you are going to hear a ring every now and then. But that lets you know that when I'm serious, when I say it is a home-based studio. We are going to probably be upgrading next year. I'm probably going to come out of the house and actually into a studio. But I'll miss the house. We'll let you know. In any case, he goes on to say, make sure the deal has a real economic purpose, independent of the tax consequences. Then figure out how to structure the deal for your best tax advantage. Now, I share with some folks, listen, there are times when you got to spend some money. Not everything that is free ends up being of value. You've got to surround yourself with a team. January, we're going to start doing some team building. Who's on your team? For example, I happen to have prepaid legal. You know why? Because I want an attorney on the team. I want, when somebody says boo, I want to say, excuse me, let me have you contact my attorney. I want a buffer between me and whatever the issue is until I can wrap my head around it, or somebody can explain to me what the problem is, and more importantly, what's the solution. So with that being said, the book, go up on Amazon, order it, go to Abe Books and get a used copy. We don't need a new copy. If you can't get a new one, get a used one. Guess what? But get $4.75. That's what we're talking about today. That is the Big Payback. Take back your power. #power. Take back your power. Bernard Kamoroff, CPA. And then, of course, your own CPA or your own tax preparer. But if wealth is in your future, if wealth is in your here and now, it's time for you to have your own expert. That's right, your own expert. It's your right, but more importantly, it is our obligation for ourselves and for the next generations behind us, because we're about lifestyle. We are about having a lifestyle change. And I will say this to you, whatever we've been doing, is it working for us? So if it's not working for us, if it is not producing the wealth, if it's not getting us to our destination, then guess what? It's time to transition. That's right, it's time to transform. Now, I say transform instead of change because change is linear. I learned that. However, transformation is trajectory. With that being said, I would like to extend a invitation to you. I am having a party. It is actually a travel party, and it is going to be this Tuesday evening at Club Cafe. That's at 209 Columbus Avenue. There is no charge because it's a travel party. And likely there will be food that you are able to purchase from the cafe itself. It is wonderful. It is a wonderful, enjoyable cafe. Parking, street parking, and you can use the app from the City of Boston to pay for your parking in that you're on the street, and you can do that. They've gotten rid of a lot of the machines now. They've gone to the app. There is a parking lot, a paid parking lot that is across the street from the cafe. We're going to be in the Napoleon Room. It's going to be a travel party, but here's the deal. It is a Dubai travel party. That's right. I'm going to be featuring pictures from Dubai, videos from Dubai. And guess what? 2016, September, it's either September or October 2016, we are going back to Dubai. Now, the question is this: will you go back as a consumer, or will you go back and make Dubai a tax deduction? The party starts at 6:30 in the evening, and you are welcome to bring guests. The room holds only 65, and I was checking. It's actually it's up registered on Eventbrite, and I've already seen people are pulling tickets from Eventbrite. In other words, they're complimentary tickets, but there are only 65 of them. So if that is something of interest to you, you want to join us for the party, you want to talk about Dubai, you want to hear how you can travel like an insider and a rock star, you interested in a platinum travel club? Then guess where you want to be on Tuesday at 6:30. That is Tuesday, December 15th at 6:30. With that being said, ladies and gentlemen, I want to thank you all for joining me for the broadcast today. We will have a broadcast on the 19th. Obviously, Christmas weekend, we will not have a broadcast, and we will pick right up the following Saturday. We are counting down. We are 14 days in countdown to the new year. I hope that you have written up your goals, that they are actually in writing so that you can make them happen. How many homeowners will we have by April of 2016? How many real estate investors will we have by April 2016? I hope that we have at least 10% of the membership of Wealth Warriors that are transacting their new real estate acquisition. Ladies and gentlemen, in the words of Trevor Otts, go out and be absolutely amazing. We'll see you next time. Bye now.